Hello, this is David Skarica, editor of AddictedToProfits.net. This is my special presentation on investing maximum pessimism. This is really the new philosophy I've taken on. This is developed over a number of years. I've done everything from investing in technical analysis to contrarian trading, momentum trading, all sorts of things. And what I've always found is the best returns is buying beaten up stocks that are undervalued. You know, every once in a while, who knows, you can get an Apple, or you could have bought Apple at 200 and doubled your money in a few months. But usually buying assets which are cheap has the most leverage, because there's numerous reasons for this. When things are negative, they're short. So there's short buying, short covering that can come and move it up. And really just, a lot of it is just basic mathematics. And if something falls from 20 to 2, it only takes a rebound back to 4 to make 100%. And at 4, you're still 80% below the all-time high. So you want to buy when the news is the worst. Actually, even though people talk about Templeton's quote being buying at the point of maximum pessimism, my favorite quote by him is that when they asked him one time, where do you think the outlook is the best? And he essentially said, that's not what I want to hear. I want to hear where the outlook is the worst, when the news is the worst. So that is kind of where you look, and we're going to show you an example of this in this presentation. I also look for bargains in undervalued sectors, and in the past few years, this is where the best gains come from. After the market's dropped a lot. This is what happens when a sector falls. This is from a great website called maintainfavor.com. And if you go look at the 3-year nominal returns in buying a sector down since the 1920s. So this is a 3-year return after a sector's dropped. 60%, the average 3-year return is 57%. 70%, 87%, 80%, 172%, and 90%, 240%. So again, buying a market when it's hitting new all-time highs usually is going to be very difficult to make 240% in a 3-year period. But the average return when buying a sector down 90% is 240%. Now, 90% declines don't happen too often, so when they do, you have to take advantage of them. So these are like some little slides I like to use to show where do you think the best stock market performance in a country has been in the past 16 months. And these pictures are what has happened in this economy in the last 16 months. You can see burning police, riots, Molotov cocktails, cars turned upside down, mass protests. It's Greece. Greece fell 95% from its 2000 high to 2012 low, and almost how much, 92 or 93% from its 2007 high to 2012 low. The market in Greece is up over 100% since this low, and believe it or not, is still cheap. And despite that, and the market actually trades in single PEs, and it's very similar to the Dow in 1932. The Dow, we're in Great Depression. The Dow fell at 89% from high to low. 25% unemployment. Very similar to what's going on in Greece today. So we can see this is the 2000 graph. You can see the real big part of the decline was here from 2007 to 2012. I really became bullish in 2012. And like the Dow in 1932, the first rally about doubled the market. Then there was about a 6-month consolidation, and the second break is happening. And the second break was really big. So what we must remember the second break in the Dow in 1932, the breakout, is that the market rallied from 1933 to 1937, essentially rallied for 4 years. And the Dow went up nearly 4 times in value. So if that were to happen this time, the street market could go up to about 3,000. I remember 3,000 would still be roughly half of the market's top in the year 2000. This is one of our big picks over the last year. This was HL Toy, Atlantic Telecom. I really like telecom companies because people are always going to have to use their phones. They're always going to pay a phone bill. They're usually heavily indebted, so they are a bit leveraged when the economy goes under. Deutsche Telekom owns a large position in Atlantic, and I knew they wouldn't let it go under, even if Greece had a default and the whatnot. And we can see this went from over $16 a share to under $1 a share. We got in about the mid $1 a share range, and you can see it moved higher. And I actually had an example of of this prior is that when Argentina had its debt crisis in 2001, TIO, the telecom company in Argentina, changed the ticker TIO, it fell over 95% from $30 to 50 cents, and then it went to $25. So this was kind of my example of this, of why that's profitable trade. This is another one. This is a gambling company. Again, a stable business, actually, a kind of a business that people might use more, even when the economy is going to turn down, because you're not working. So this is an online gaming company. You can see that it went from $11 a share down to $2 a share, and was trading at a single-digit PE, yielding in the 10 to 15, 20% range. And we recommended it about here, about the 260, 270 area, and you can see it's done pretty well since then. So on top of Greece, other European markets are cheap as well. Italy, Spain, Ireland, and Portugal are all off huge from their highs. Most of them are trading in the single-digit PEs. And we can see this is this is Italy. It went from 43,000 down to 12,000. And we've actually, I'm really excited about the Italian market because we've actually built this base for the past 2 years and is now just coming out of the base, but are still cheap. We're still over 50% lower than the 2007 high Italian stocks. And actually, at the bottom of the Italian market, Exxon had a larger market cap than the entire Italian market. This is Spain. You can see the same kind of thing, down over 60% from top to bottom, and then moved higher. Has since, and again, broken out of here. So I like, and actually some news came out today that Bill Gates actually is buying interest in a Spanish real estate development company. So he obviously sees a turnaround happening there as well. And again, a lot of it is just basic math. Like, you've had a 5-year recession in Greece, you've had a 2-year recession in Italy and Spain. You're probably going to only see a bounce off that bottom. So, in our next issue, our next update, we're going to talk about how I mix some technical analysis things to confirm my maximum pessimism trade. Actually,